G'day everyone, this is Inka here. Welcome to Investor Journeys, where we chat with everyday Aussies and seasoned investors about their property journeys, the wins, the stuff-ups and everything in between. Whether they've got one property or a whole portfolio, we dive into how they did it, what they've learned and what their journey's been like so far. No fluff, just real stories from real people. So let's get stuck in. G'day everyone, welcome to the Investor Journeys podcast. We've got a very exciting guest for you today. Very well known in the industry, the GM of Hotspotting. Thank you, Tim, for coming on today, joining and sharing your journey.
It's an absolute pleasure to be here. Thanks for having me.
Absolutely. Well, Tim, we've obviously corresponded a lot over the email, so this is the first time we're catching up in person, albeit through online. But look, I'm really appreciative of you coming on. You're a busy man. You're hosting your own podcast through Hotspotting, which I listen to regularly. And look, for the listeners out there, whether they be my client or general audience, I get a lot out of your reports. It's almost on a monthly basis. I'm asking questions. So I'm super surprised that you've actually come to join me after all the questions I've been pumping you with.
Anytime, not a problem at all.
Yeah. So thanks again. So Tim, based on this podcast, we learn about people's journeys and it's great to have you on the other side of the microphone today. And do you want to tell us a little bit about your upbringing and where you've come from?
Yeah, sure. I reside in Melbourne now, but I grew up in country Victoria, a little town called Yea, which is about 2 hours north of Melbourne on the way to Mount Buller. My parents were originally from St Kilda down here in Melbourne, and when I was 18 months old, they bought a pub on the way to the snowfields because they used to go up to the snowfields all the time in the winter to go skiing and things like that. And they thought, wouldn't it be great to buy a business somewhere on the way up to Mount Buller and we can, shoot up there anytime we like. And we're 2025 now, and since 1984, they've never been back to the snowfield. So that goes to tell you what a business can do to you. But anyway, that's where I was 18 months old when we first moved up there, and I grew up in a very small country town. Went to school, primary school, and everything there. My parents separated when I was reasonably young, maybe 6 or 7 or something. So I grew up with mum and a younger brother and younger sister. My brother's 5 years younger, and sister 7 years younger. Growing up the single mum, obviously not a lot of money going around and things like that, but I was lucky enough to get a football scholarship to go to Assumption College in Kilmore. So I ended up being lucky enough to go to a private school, which wouldn't have occurred if it hadn't have been for that football scholarship. And to bore your audience with the football story, I went there on a football scholarship. I think second game that I played there, I broke my left-hand collarbone, and then I had 7 weeks off. First game back on the field, I broke my right-hand collarbone. So I didn't play a hell of a lot of football there, but my journey through education was really, I just had to get it done. Like I never enjoyed school or anything like that. And as I mentioned at the start, my parents owned a hotel, and growing up in a pub when I was quite young, being the son of a publican, you've sort of really enjoyed going down. We lived upstairs and I'd go downstairs and everybody in the pub knew your name and everything. And I have really fond memories of it. So it was probably a really bad thing that the whole way through my schooling, all I wanted to do was go back to that pub. So sure enough, I finished school. I had no interest in uni. I went back to that pub and I started managing it for those owners. I started as a bartender and then I managed it for several years. And that's all I wanted to do. And, for me, I don't know how I ended up in real estate. So I had 13 years of hospitality. And I think genuinely the only reason I ended up in real estate is I found out about weekends and everyone was telling me how great their weekends were. I thought, I'd just work on weekends. What is this amazing thing you're talking about? And I applied for a job in the Herald Sun and I fell into real estate, and that's really how I got here.
Yeah, interesting. Well, I mean, it's amazing that, the experiences you've had from such a young age, being exposed to entrepreneurship and running that pub. I mean, how did you find the differences between growing up in country Victoria and then going into college? Like, did you want to get back into the country? Is that sort of why you went back apart from the pub?
It's an interesting question. I basically never thought I'd leave my country town, but I think anybody who grows up in a country town thinks that too. And, after 13 years in hospitality, so I managed a hotel and then I went into my own hotel with some partners and had a really good career in hospitality. We won best restaurant in country Victoria, best accommodation in country Victoria, and a lot of, we're on TV shows and all sorts of things. So it had been a really good career for me in hospitality, but I knew that I needed to change. And in order for me to be able to go to the next step in my career, I had to look outside of Yea. And as I said, I applied for a job in the Herald Sun, fell into a role with a company called Reventon in St Kilda Road here in Melbourne. And that's where my real estate journey began. I sort of walked into what was called an in-home consultant role at the time. And my job was to go out and educate, customers about what Reventon did, which was financial planning, mortgage broking, accounting, all of those things. So my job was actually to tell everybody, you need to go in and talk to the experts. And after about 3 months, I went, wait a second, I want to be one of the experts. So I went and did my mortgage diploma. I went and got my real estate license, and I very quickly became the national sales manager for that business. And I stayed there for about 5 years. I was lucky enough to get a role with a company called Investorist, which is essentially like a wholesale version of realestate.com. They connect real estate professionals with developers and builders all over the world. And I was lucky enough in 2016, I think it was, to get offered a role there as the global sales director. And I was sent overseas, helping set up offices overseas and managing, teams abroad. So I did 14 countries in 3 years, which, to work in real estate in that many countries gives you incredible insight. So I was very lucky to have that, especially early in my career, to be able to go and see what different cultures do in real estate, the way that, if we sit and talk about buyers advocacy here in Australia now, that wasn't really talked about years ago, but I lived in Miami for 3 years, and in the US, on both sides of the transaction, you always have a real estate professional, one acting on behalf of the vendor, one acting on behalf of the purchaser. And coming home to Australia in 2019, I thought to myself, real estate's an expensive exercise if you get this wrong. Why has the vendor got a professional always acting on their behalf, but the purchaser's not always represented? And I saw a big opportunity there. And we, at the time at Reventime, went, okay, well, we really need to be looking at established properties that we could offer that type of service for, to help investors navigate the world of buying real estate. And it's really easy to buy, but it's hard to keep, and hard to replicate the process and build a big portfolio. So that's what we did. And then I was lucky enough to join Terry at Hotspotting 2023. So I've been here coming up to 3 years now. And I was a customer of Hotspotting for many years. Used to buy all the research to help my clients invest, and for my own portfolio, buying in the locations that Terry invested. So to work next to Terry these days and, see how the mind works and, help be part of that process is something that's really fulfilling.
Yeah, look, Terry has been there for a long time. I mean, I don't know Terry personally, but I've heard his story in sort of different podcasts, and he's been around for a long time, and he certainly has built it from the ground up, in terms of the business and the I suppose the research and the type of metrics, that he's looked for. It's very genuine, and it's very, there's a lot of thought that goes through it. And I suppose based on all the experience that he's had, he's been able to build a very successful business. I got to know Hotspotting, as has a lot of buyers agents, through the Buyers Agency Institute, because, that was one of the research platforms that was promoted through that time. And I looked into it, and I just found it so insightful. And it, like I said, it forms such a big part of the business today.
We love hearing that.
Yeah. Back to your story. You're going from a country boy to seeing all these countries around the world, before Hotspotting and Reventime. Like, how was that? Like, what sort of do you remember from those experiences?
Well, it's funny. I remember before I had that opportunity to go overseas, the only place I'd ever visited outside of Australian shores was Fiji. And, to have gone from not traveling outside of Australia much at all to all of a sudden, in 2018, I did 98 flights in a year, 27 cities in the US, a lot of different countries. So I went from completely not traveling to a lot of travel. But I feel very lucky and grateful that I had that opportunity, because firstly, I do love travel. Not that I knew that at the time, but I could have gone and done a lot of that travel on my own ticket. And I was lucky enough to be able to, do that through work. So it meant that it was a really affordable way for me to go and see the world. But at first, you have that guilt. I'm traveling all over these places, and I'd go from airport to, hotel, and then to boardroom, and then back to the hotel. Never got to see any of the countries I was in the first, 12 to 18 months. But after about 18 months, I went, what's the point of traveling to all of these cities and not actually putting aside some time to actually feel the culture and understand a bit more about it? It was all work. But then, after 18 months, I started to, I'd go to China. I'd spend the Sunday climbing the Great Wall, or I'd go to, Europe and see the sights. It became part of the process. So it was a really amazing time.
Yeah, amazing. I mean, that would have been one hell of an experience. Look, I've traveled for work personally myself in my previous life, and it sounds glamorous, but especially when you're doing the hotel, like you just said, it wears you out so much, especially.
Especially coming from Australia, where it's a bloody long way to get to anywhere. But people often think about the flight. It's the sitting at the airport, waiting on the delays, packing, and it's the commute back and forwards. It's a really tedious exercise to be traveling that regularly.
Yeah, absolutely. You know, for me, especially these
A
days.
lot of money spent on chiropractors as well when you're stuck on long haul flights all the
Yeah,
time.
I think that's probably why my back has gone to be, you know, it's, yeah, sitting on all those flights. But yeah, what a journey it's been for you, I suppose, from that yay boy to hotspotting and everything. Now, what got you into your own property journey? You know, is that something that started quite early through this whole real estate process, or was it something that happened a bit later on?
Yeah, look, I really don't know how to answer that. I know I bought my first property when I was about 23, I think. That was a block of land in Yea and held that for 5 or 6 years with my ex-partner. And then, when I moved to Melbourne, we sold that. I think I had it for about 6 years and it maybe went up $15,000.
Did you build on it?
No, didn't build on it. Sold it $15,000 more than what we initially paid for it. But if you take into account the holding costs,
Yeah.
probably went backwards. So there was a learning curve in that, you don't have to buy in your backyard. That was the first one. But obviously at that time, I had no experience in real estate finance. So as soon as I came into working at Reventon, the education, and I was a, seminar buff. I'd go to every seminar, I'd see every speaker to learn, whatever I possibly could. I've always been a bit of a sponge with that type of thing. But in terms of, we'll talk about asset classes and things a little bit later. But one of the things that I thought it was worthwhile mentioning is regardless of whether you like real estate or not, there's also a risk profile and an ambition, right? And that something needs to drive that. One of the things I talk about when I do sales training is people are motivated by one of two things. It's either fear of a pain or that, greed and gain. And it's really interesting if you start to think about why you do the things you do. Why do you invest in things? It's either to avoid that pain. I don't want to be broke. I want to, create a legacy for my kids. I want to make sure that I don't have debt when I retire and all those things. And then there's also that aspirational part about, I want to have 10 properties and I don't want to, travel the world at a young age and all those different things. So for me, the first one that really motivated me was in year 12, just before we went and embarked on, our final year of ACE, our school did something quite unique. They actually sent us all away on a school retreat. And without us knowing, they had our parents write us a letter. And it was to motivate you, going into the school year. And I'll never forget this letter because my mum said, look, Tim, I know that you'll be successful. You've got a managerial, aura around you and people want you. So you'll be a leader. But she said, I don't care what you do as long as you don't struggle like I have. And for me, that was like, especially as a young kid, when you've been, I was a typical 17-year-old, don't listen to your parents, be a smart ass, out on the weekends partying, all that type of thing. And I think I was on top of the world. And I'd never really given, I was ignorant. I'd never really given any thought to what she had to go through to raise us three kids.
That must have hit home.
Yeah, it did. And that to me, and especially being the elder sibling as well, it sort of gave me that motivation that it's not just about, I don't want the Ferrari or the Lamborghini and things like that. I want to make sure that, I can be the provider and I can, and that's not just for, I've got kids now, but it's for anybody around you. And the saying that I learned very early in my career in doing real estate, and that was, when you're talking about investment, a lot of people will put their kids first and say, look, we'll put all our kids through school, then we'll get them into university, then we'll worry about focusing on our retirement. And there was a saying that said, when you're on an airplane and they're giving the safety demonstration and the oxygen comes out of the roof, who do they tell you to put it on first? And if you don't put it on yourself, you can't help your kids. And that resonated with me as well, as cliche as it is. And the reason being is I went, you know what? Real estate is a great investment class. It's something that Aussies trust. We can kick it and everything like that. And I instantly wanted to own real estate. I love real estate. I could, look at it online all day long, like most of us, right? But one of the things that I quickly learned, which you'll probably think is quite surprising for someone who works in, the industry to be saying this, but it's not easy to become wealthy through real estate. And the thing is, it's a really expensive exercise if, one, you get it wrong. Two, if you don't get structure right and things like that. So buy the wrong property, don't get the structure right, don't get the financing right in terms of being able to get the cash flow and all those types of things. Really hard to replicate. So I really made it my mission to understand the numbers. And that's why starting in finance before I went into real estate gave me a really good foundation. The other part was that I said, I'm not going to become super wealthy and be able to provide and all those types of things just by being, a rent investor and investing in real estate. I really, after going and seeing all these seminars of people standing up on stage and saying, I'm a millionaire because I invest in real estate. When you start to look at them, I go, you are a millionaire through your business and probably through selling these courses, and you own a lot of real estate now. But a lot of these people preaching that they can invest in real estate and create all these things, I've seen the way they do it, and that's not really the case. And I think it's really important, especially for your listeners, to understand that real estate is not a get rich quick. It is, in fact, in terms of the growth that you can get on them, they all go through cycles. We had a report we did last week where we had 40% growth in one suburb, right? That's for year one. But if you look at it over a 10-year, if you can achieve over 10% per annum, you're doing very well. Whereas in a lot of other asset classes, you can get above 10% and you don't have those transactional costs of buying and selling.
Yeah, absolutely. I think because of the way things are marketed at the moment, you've made such a good point. Because, yeah, like I said, the way things are marketed at the moment, everyone's saying how they've achieved a 20% growth in the last 2 years or 40% growth in the last 2 years in a particular area. But then what's next? And then what's next? What's going to happen after 2 years? What's going to happen after 4 years? Nothing can keep going at that rate. We all know that. But the issue with that is that creates a perception out there that everything can grow up, in that amount. And I think, the delayed gratification side of things and, the way everyone wants everything so soon, but they see these results happening, they think that it's just going to happen forever. And that's where you've got to provide education to your, the buyer, or the buyers have got to get educated themselves and understanding, the long-term journey with all of these markets. And yeah, I completely agree that, yeah, you can do very well in a short space of time. Absolutely. But you cannot get rich from a 20% growth and then, it stops there. You've got to be able to navigate through this whole journey of yours. And that's a 10, 20 year plus horizon that is in real estate. So I completely get your point there.
Yeah. It's interesting. If you ask Terry Ryder today, if he was to rebuild this business, would he use the same name Hotspot? And the answer is no. And the reason being is that I think for a lot of people, the perception of what hotspot means is you're buying a location that's going to have this big burst of growth, and then quite often not much happens after that. And the truth be known, we cover about 120 different locations in Australia in terms of our constant, reviewing of them and creating reports for them and everything. But there's pretty much only 10 to 15 locations that we're recommending at any time. And we will never put anything into a report without having a long-term growth view at it. So we will say, if we're putting something in here, we're expecting this to be a really good investment long-term, because we know that markets are all cyclical. They go up, they come down, or even if they don't come down, they plateau and then they go up again. And the thing is, when we put them into the reports, the higher up the reports are, comes down to the timing. So we have two formulas. One is the price predictor index, monitoring sales volumes. That tells us when the right time to enter the market is, when we see rising activity. But any of those locations that are in there, we're saying if you can get, short-term growth, that's a benefit. But what we're really investing in these locations for is that long-term growth. And the other part of that is, I can give you a recommendation on a property and your next door neighbor the same property, and one will work for you and the same property won't work for them, because if you can't structure them right and the cash flow doesn't work, regardless of whether you get growth, if you're still hocked to the eyeballs at 100% debt on that, and you get 150 worth of 50 grand worth of growth, but you can't have the borrowings to go again, that property's not going to work for you. So it really comes down to that strategy in the portfolio planning that people miss.
Mate, you're speaking my language, because I just put this out the other day about how you can have two people with the same budget and the same borrowing capacity who I potentially may put in two different locations because of their risk appetite, their ability to leverage into a market and use equity to go again. But that particular market may not go forever, whereas the other market has optimal growth strategy because they've got a longer time horizon and they've got other deposits to be putting other properties. And I completely agree with you, but I think we're all on the same page that it's not just a copy and paste scenario where you look at the latest growth suburb from a report, whatever. You've got to make sure it tailors to your circumstances. And that's where it is absolutely key. And I get your point about the hot spotting side of things, the name, but I think, it is critical for our listeners to understand that it is a long-term play.
One last thing I mentioned on that part as well, just because it's around that strategy part. I think there's a understanding, generally speaking, amongst consumers about what positive and negative geared properties are. People look at it and go, oh, that property is positively geared. And I go, every property can be positively geared if you put down a 50% or 100% deposit. It's not about, the negative gearing and positive gearing is your structure. It is about how you're going to leverage debt. And that's where, again, that property might not work for this person, but it'll work for that person because they put down a bigger deposit. They've got instant cash flow, which is going to allow them to go again. But these are the things that really people think, oh, I need a positively geared property. Okay, that's fine. Give me 50% deposit and I'll give you a positively geared property all day long, anywhere you want.
Yeah, absolutely. Look, I mean, look, we're meant to talk about your property journey here, but I've got a point to make too. Gross yield and net yield, right? Everyone comes to me going, Einka, look, regional Queensland, greatest yield in the world, best cash flow, happy days. And then I show them a breakdown of the insurances, the property manager fees, the rates, everything that goes into what you've got to put into a property aside from the rent, which, yes, it is generally higher than if it's, say, a Victorian location. And then you look at the annual numbers just on a same budget, same deposit, same rates, interest rates, and they're almost neck and neck. And, it's such a fallacy out there when people get.
That's a really good point about the growth and net yield, and what that you're talking about that today. And in a lot of those pockets in the North Queensland area, yes, you're paying a high insurance premium, but there's a very good chance you won't get insurance at all in the future. So not only have you got this property that was costing you a lot of money, you might struggle to sell it in the future because the next buyer cannot get insurance.
Yeah, that's certainly a variable out there at the moment, which is what, through climate risk and everything.
I've heard a lot of very smart people say that the biggest risk to Australian real estate right now is climate risk. And that's not just talking about, just floods and things like that. It's insurance and holding costs.
Yeah, absolutely. So no, I think it's all well worth considering. And I think it just showcases how much thought there needs to be aside from going on realestate.com and hearing it from the news. So I think that's well put. So do you want to just tell us about your first property, Matt?
Yes, I bought that block of land, sold that about 6 years later. By that stage, I'm now working in real estate. And I suppose, the term working in real estate is a throwaway line. Most people think you're knocking on doors and trying to sell people's homes. I've never sold real estate. I've always been on the buyer side. So because of the way that I sort of worked in the industry, I was always looking at it in terms of how do I build portfolio? How do I actually get to the end goal, whatever that goal is? And, working alongside financial planners and brokers and things like that, it gave me a really good foundation to say, well, I need to quality check my own plans as well. What am I going to be buying and building and everything? So right now, as I sit here today, my wife and I are still rent investors. We live in Melbourne in Victoria, but it doesn't make sense for us to own this house. Like, it would cost us 15 grand a month in interest repayments, and we pay 4 grand a month in rent, right? That doesn't make sense to me. Now, it doesn't mean that we don't want to own this house, but we want to buy this house with a little amount of debt as possible when we do. So we made a conscious decision. We have young kids. It's not everybody's dream to be renting forever, and we certainly don't intend to do that forever, but we can certainly have our money working smarter for us by investing all over Australia. So we've got investments in a lot of different states, gives us diversification, gives us not just diversification in terms of growth markets in different states, but also, diversification in terms of multiple cash flow, maximizing yields, and also making sure that these properties, even in a high interest rate environment, are paying their own way. And the plan for us would be, in the future, we don't just invest in real estate. We're, share market. I've literally invested in rare whiskey in Scotland and all sorts of things, because I do believe that you need to have things outside of real estate, as we touched on earlier. But our goal would be that in the future, we sell down some investments to be able to buy our owner occupier with as little amount of debt as possible.
Yeah, I think that's a good point, because look, I'm talking to a lot of single people, even couples in Sydney specifically, who come to me going, Einka, look, I don't know what to do here. We want to buy our own principal place. And these guys are, late 20s or mid 20s, or could be even early 30s. And, how can we use real estate to get to our property if we are going to live in Sydney? We don't know what the plans are in the future, but we still want to optimize what we can do. And I say the same thing, exactly what you've just said, is that you can continue renting. There's definitely not
it's just a lifestyle choice. It's a financial choice, but it's also a lifestyle choice. And some people can't commit to that, right? And I get that.
I get it too. Absolutely. It's an emotional decision to make, and that's based on your lifestyle. But for those who can rent, especially like you just mentioned, like yourselves, be in a low yielding area where you can rent where you want to live, but use other markets where your money, which you have the ability to be able to get into other market and grow your wealth outside Sydney. Using a multiple asset base will eventually catch up to the one property in Sydney, in my opinion. And so, yeah.
The other part is that it's not just about whether or not you can afford to do it today. The fact is, if we afforded to do it today, we might be buying this house as a stepping stone. And a stepping stone here could have, a $100,000 stamp duty implication this time, selling expenses when we sell. And then, of course, we've got to re-enter the market. Whenever you're selling, you're buying in the same market elsewhere, and that property's gone up. I'm paying stamp duty again. it can be a vicious cycle. So the transactional costs in real estate, as we touched on at the start, are so significant. And then you've got your capital gains and all those types of things, obviously not in your owner occupier, but all these expenses that catch up with you. And that's why it's very difficult to make money in real estate. And that's why the structure, the location, and all of these things are paramount.
Yeah, absolutely. And don't forget the opportunity cost, because when you get into a stepping stone in a place like Sydney, for example, or a very expensive place in Melbourne, pretty much any capital these days, the borrowing capacity that you have when you own that PPR is significantly reduced, depending on your income, granted. But then how else are you going to build wealth outside your current place, right? The aim of the game in most people's eyes is to get a passive income out of real estate. Some want a significant amount of wealth, but you've got to generate an income in some way. And to do that, generally speaking, you've got to use your ability to borrow money to do that. And so when you buy generally over $1 million property, that significantly reduces that ability to do that. So that's a big opportunity cost, and obviously time to be out of the market because you bought your own PPR. Like I said, I'm with you. I completely get it when people have to do that. They've got a growing family. They want security. They don't want
School zones, all sorts of things.
school zones and they don't want people, a landlord, to tell them, well, we're selling the place, you've got to move, and you've got 2 toddlers in the house. I completely get that part, but you've got to think about potentially the financial opportunity cost that you've got. So it sounds like you've diversified quite a bit, and that whiskey in Scotland, geez, that sounds pretty good. What got you into that, just out of interest?
It's actually the fastest growing asset class in the world, rare whiskey at the moment. And
Really?
yeah. So if you look into it, it's really interesting. So we bought a couple of casks. When I say casks, like big barrels of whiskey that basically, when we bought them, were 9 years old, and we probably paid about equivalent of what's about $18 a bottle. And by the time it gets to maturity of about 18 years old or something like that, they anticipate you could have up to about 500% growth on it. And it's pretty remarkable. But when you buy the cask, you're also getting insurance and rent as part of that as well. So a unique thing. The thing is, it doesn't give you income. So it's not for everybody, but it's something that, I bought one in my personal name and 2 in my self-managed super fund. One of the reasons I do it with the super fund is I can't access that money by buying those casks. They can just sit there. And obviously when I sell them in the future, put it back into the super.
Oh, fantastic. That sounds fascinating.
Yeah.
Well, I suppose back on your journey, Tim's, you've invested in different sort of asset classes, and you're looking to have that potential asset base to grant you that upgrade to PPR. So your future goals, is that to stabilize in the Melbourne market and buy your own place there?
Ooh, that's a good question. It depends if you ask me or ask my wife.
It's always this conundrum.
Yeah, look, I mean, it's interesting because right now our kids are both young. My wife's got a very good bit of overseas travel again, even working and things like that. So that could be on the agenda, but also when it does come time to buying the owner occupier, as I said, I don't want to do that with much debt because I don't want to stop investing, and also don't want to unload too many investments to be able to achieve that. So we're not in any hurry to get that house. That could change with, if our owners here decided they want to sell up, or you get frustrated with that a couple of times, we might end up having to pull the trigger sooner, but we're not in any urgency.
I assume you haven't bought any land since the yay buddy there, but
I bought land several times and built on it in other states.
oh, you've built on it.
Yeah,
Yes.
I've built a couple of houses for investments in the past. Yeah.
Yeah, cool. And commercial, is that ever in your?
I've done commercial in super once. It's not my bread and butter. I think it's a really good asset class. In a lot of ways, I think it's better than residential, to be completely honest. It's just not as easy for a lot of people to get into. The amount of research and due diligence that's required. Plus, it's higher risk in a lot of ways. There's probably a few people that disagree with that statement, but I think it's higher risk, and I think the banks would agree with me. That's where my mentality comes from. But they're only prepared to give you 70%, 80%, where I can go 95% or 100% on residential. I think it's fair to say that for most mum and dad investors, being able to buy residential property is a pretty safe investment.
Yeah, I think you're right. I mean, look, commercial for me is definitely in my radar, and in terms of risk, I think the way the banks see it is, those who get into commercial, they don't know potentially, the banks don't know their circumstances financially. And if you get a vacancy in a commercial property, generally speaking, you can have quite a long vacancy.
You buy a commercial asset, you're not really buying it. The bank's buying it if you've got that. And they need to be able to protect themselves, and they need to know there's another buyer around the corner for it. So, yeah, I don't know. For me, I think it's a fantastic thing, especially in a high income environment like we're in today. When you were talking before about gross and net yield, your net yield on a lot of commercial assets is far better.
Yeah, for sure. No, I agree. And it's not for everyone. There's a lot of nuances with commercial. So
Yeah.
I was just interested to see if that was part of the radar. But what I suppose my last question for you is now you know what you know now based on your, your hotspot and your other roles in real estate. Would you do anything differently?
Yeah, absolutely. I mean, look, I think like everybody would say, I wish you started earlier, right? But at the same time, I had other priorities in life at that time. Even the 3 years I was overseas, I did over one piece of real estate here at the time. But, there were 3 years that I wasn't really doing much with my money other than enjoying myself. Would I change that? I don't know. Looking back, I'd love to say like I accumulated a couple more pieces of real estate in that time, but at the same time, I was really enjoying life. I had no idea how long I'd be living outside of the country for as well. And yeah, look, the main thing that I think I'd love visitors, listeners to take away from this conversation is that you really can get out of real estate what you put into it, but the best investment you can make is time and research. And it's a cliche thing to say, but you really need to be asking a lot of questions to a lot of people because you will get different answers from everybody. And what I say to people is that if you go out, you ask a heap of different questions, you get a lot of different insights, you'll be able to resonate a strategy that works for you. And it really isn't going to work. Not everybody's going to, buy with me. Not everybody's going to buy with you, but there's something that's going to resonate with somebody when they're meeting with different experts. So my recommendation is do shop around, go out, meet with different people, ask them, what their strategy is, ask them their background and history, and something will resonate, and then you can pull the trigger on it. But without that education, you won't have the confidence to click go.
Yeah, I would completely agree with that. And I think not the issue, but one of the things in real estate at the moment is that there's no compliance about some advice people, and it's such a high transactional asset class that it becomes, very problematic for a lot of buyers. And I think the research side of things, the key thing I think you said is ask questions. The issue is, in my opinion, from what I've seen, is the method of research that people do. And they look at using YouTube or Instagram or, potentially media articles, which are just clickbait to formulate their own opinions and confirmation bias. But, it's asking those questions and actually getting deep down into the conversations is what I think really helps people to get to their to the knowledge base that they want to get to. So I think that's a key piece of advice.
I don't think you don't want to be in the paralysis analysis situation, but it needs to be almost reverse engineer your goal. What am I trying to achieve? What do I need in order to get to that goal? And who's the best person to help me deliver it? Because you will find that if you work on your strategy and your goal planning, you'll be able to find somebody who's going to be able to accommodate that plan.
Absolutely. I think the way you said reverse engineer, it makes you think of that guy. And that's what makes you then resonate to what strategy you want it to do, even if you don't know everything. So I think that's a key piece rather than just thinking about what's the best, best market to get into.
I know a lot of people, when they think about the investment plans, they're thinking about the number of properties they want.
Yes.
And it's one of the first things I have when people do a strategy session with me. They say, I want 10 properties in 10 years. And I go, do you mind if they're 10 shit properties or would you like 5 really good properties? And the reason I ask that question, as cheeky as it might sound, is that, if you're thinking about the number of properties, you're actually not really giving much thought to how successful those properties are. Because ultimately what we really want is high performing properties. And I'll take 3 high performing properties over 10 crap ones that are giving me heaps of maintenance and headaches.
Mate, absolutely. I think you'll hear the podcast before this, and we said exactly the same thing. Do not think about the number of properties in your portfolio. Obviously, you've got to have a few there to give you the options, but you've got to make sure they're high performing. So, completely agree. Tim, you've given so many gold nuggets through this podcast, mate, and it's a testament, I think, to your journey and everything like that. So, I really appreciate you coming on, and thanks for sharing your own journey and just being open with everything. So, thank you.
You're welcome.
Hey guys, thanks for tuning in. If you enjoyed the chat, feel free to drop us a rating on Spotify or wherever you listen. It helps us reach more listeners to help them with their journey. Catch you in the next episode.